In this video, we're going to learn how to use TaxSlayer, the tax software that we will be using for the VITA program, and we're going to use it to train on during our tax class. You'll look at the document that you were provided with, and you'll go to the address that you were given. Once you get there, you're going to be asked to log in. This just gets you into the training area. This doesn't actually get you into the software itself. The password is train, all caps, Pro Web. Once you type that in, hit login, and then it's going to take you into another place for you to log in, and you'll see up in this corner it says Practice Lab. Now later on when you're actually using this for the tax program, obviously you won't be in the training site and you'll be given a different web address to go to. But for the practice, we're going to go here. Now I've already set up my account, and so it has my information loaded in, but you're going to need to create an account. When you create your account, I'm going to give you some very specific parameters for creating a username and for creating a password. The reason is I want you to create these without having to use common passwords that you use for other sites or other things that might be sensitive or private information. And I'm going to use the password and username that you list to log on and look at your homework. When you go in to create your new account, the screen will look like this. For the email address, I want you to use your Drury email address. For the username, it should be all of the information before the @ symbol in your Drury email address. So for example, my email address is tcossie@drury.edu, so tcossie is my username. Then for the password, I am going to assign the password to you, and that's the password that you're going to use to log into this account. Under program type, you're going to select VITA, and under the site identification number, you're going to enter the number that I have given you on the login information document. And then when you come down here to password recovery, I want everybody to use the same password recovery information. Choose in what city were you born and type in Springfield. Not Springfield, Missouri, or Springfield, any other state, just type in Springfield. I don't care if that's the city you were born in or not, that's the password recovery information we're going to use. So once you've created your account, you'll log in, and you're going to see a screen that looks like this if you're in the Practice Lab area and not doing a real return. It should say Practice Lab up here and down here, and click Go to Practice Area. Once you're in, you can begin a new tax return. So choose Start New Tax Return and enter the Social Security number. Now in the real software, when we get into it, you're going to be able to enter the whole number. Here they have certain fields that you can't enter because this is all training. And so you're going to look at Practice Return 1 for Arabella Narcissus, and it's going to say 111, and then the two middle digits you'll treat as 00, and then enter any 4 digits for the last 4 of the Social Security number. So I'm going to enter 1111 and start the return. And then you have to come down here and confirm the same Social Security number. Looks like I've already tried to log in, so I'm going to fudge this a little bit, change their social to 2. And then we come in and we're going to indicate the filing status. Since we've been through tax class, we should be able to make that determination for ourselves. What is the filing status of our taxpayer? If we go through the process of determining Arabella's filing status, we see that she's unmarried, and then we see that we have her sister Ginger, who she pays 75% of the support for. When you read through all of the facts, then you can go ahead and apply the dependency tests. First, we apply the qualifying child test to see if Ginger can be a qualifying child for Arabella. So there's a relationship test. Ginger's a stepsister, she qualifies. But under the age test, we notice that Ginger was born in 1963. And we don't see any indication here that Ginger was disabled, so the age test is failed. Ginger cannot be a qualifying child for Arabella. But we're not completely without hope. Now we go over to the qualifying relative test. And first we need to ask if Ginger can be a qualifying child of anyone else. If she can, we don't need to look at those other tests. Since Ginger is born in 1963, and since she does not seem to have a disability, she can't be anyone else's qualifying child, so we can go on to the remainder of those tests for qualifying relative. As we said before, she meets the relationship test. Now we have the gross income test. As long as she makes under the amount of the exemption for the given year, she's going to pass the gross income test. She passes that because she has income of only $2,000. And then we look at the support test for qualifying relative. Here, Arabella has to have provided more than 1/2 of Ginger's support, or be part of a group that provided more than 1/2 of Ginger's support, and then herself have provided 10% of it. It looks like under the fact pattern that she provided 75% of the support for Ginger, so Ginger will qualify as a qualifying relative. That means Arabella can be head of household. Then we choose Continue. And we're going to enter our taxpayer's information here. So when they say primary first name, it means they want to know the name of the first taxpayer. And that's Arabella. C. Narcissus. And the suffix would be if she was a junior or senior, any of that. She's not. And then we're going to enter her birth date. And the problem tells us that that is 5/15 of 1982. Her occupation should be given in the fact pattern here. And it looks like she's an accountant. Then we go through all of these other checkboxes and see if we need to check anything. It looks like Arabella is not a dependent on someone else's tax return. You can generally assume a person is not a dependent when you're given a problem, unless you're told otherwise. Now, when we're actually in the live sessions in VITA, you need to ask and verify that somebody can't be claimed as a dependent on someone else's return. But for the sake of efficiency, when you're working practice problems, unless you're told otherwise, assume they are not a dependent of someone else. As far as we know, Arabella is not a student or blind, and she didn't die this year. There's a line here where you can check if the taxpayer wishes to contribute $3 to the Presidential Election Campaign Fund. This is not actually an extra charge on the person's tax return. They don't pay an extra $3. What this does is it just designates $3 of their tax to go towards this particular fund. We always ask our clients if they want it to go towards this, but it really has no effect on them one way or the other if they check that. And then this checkbox is for the taxpayer or spouse if they served in a combat zone during the current year. We don't have any indication that that was the case for our taxpayer. Then we come down here and we enter the address information. Then you'll come down and you'll enter the zip code, and for Arabella it's 64836. It automatically fills in the next 3 boxes for you. It fills in the town, the state, and again another state indicating that they're a resident. You need to double check and make sure that the town and the state that are being filled in are correct, otherwise you might have an error in the zip code that you've entered. And then you'll want to double check to make sure that they were in fact a resident of that state as of the end of the year, 12/31. And then you can see they've got the year in brackets, or they have a 0 in brackets. That's to indicate the most recent tax year. And then you'll enter in Arabella's phone number. So we've assigned her a number of 417-873-3333. Then we can click Continue. And it will take us in to enter any dependency information. We know we have Ginger. We determined she was a dependent, so we're going to click Yes. And we will enter in the dependent's information. So I've put Ginger's information in here, including her date of birth. You're only going to check this box if the dependent does not have a social security number or an ITN. or an ATN. ITN is a number that's assigned when you have a person who's international and they need a number for tax reporting, and the ATN is an alternative tax identification number. Again, it's assigned to somebody who wouldn't normally have a social security number. So only if you have a dependent who doesn't have one of those identifying types of numbers would you check that box. Otherwise, you skip over the checkbox and you enter the social security number. Then you'll enter the relationship. And we said that she was a stepsister. And you have to indicate the number of months that they lived in the home. And it says that she lived with Arabella all year, so 12 months. And then we have to come down and answer some questions about that dependent. Indicate if they're a full-time student, disabled. This next box you'll check if the person that you're entering information for is not your dependent. Generally, if a person is not your dependent, you're not going to list them on the return. There may be a few special exceptions, but we will not have learned those by the time you are watching this video. You have the option to opt out of claiming somebody for earned income credit purposes. Again, we will not have learned about that by the time of this video, and people almost never opt out of this, so you're probably never going to check this box, at least at your time at jury. And then you would check here if the dependent is married, because we did learn that there are special rules for married dependents when you have the joint return test. It would then take you to another screen where you have to answer a bunch of questions about your married dependent. But fortunately, none of those apply to Ginger, so we're going to continue. It looks like the social security number I entered is not going to be allowed, so I'm going to change that up and you'll see a different one appear on your problem. So once you enter in a social security number that the system will take, you'll hit save again and it takes you into a screen that looks like this. And if you have additional dependents to enter, you're going to hit the add button and go through that same screen for every dependent. If you don't have any other dependents, you will then continue. Now you come to a screen where you're going to enter information about various types of income earned. You do have a section, you have a choice where the software can guide you through. This goes much more slowly than choosing enter myself, because if you can enter it by yourself, which we are going to learn how to do to be the most efficient tax preparers we can be, it goes a lot faster for you. So now this is going to list lots of different types of income for you. And we know that Arabella has a W-2, so we begin this W-2. In this top section, it asks for some information. We don't need to worry about the control number because we're going to be e-filing all of our returns. An IRS verification code, we almost never have those, but make sure to look at the W-2s, and if you have one, enter it in. Almost all of our W-2s are going to have this box checked. This is a standard W-2. However, if you have somebody who comes in and they say, I received a W-2 and it was incorrect and we had to have a new one issued, or if they say, I lost mine and we had to get a new one, then you're going to check one of these two boxes. Corrected means that some of the numbers were wrong and they had to issue a new one and change the numbers. Substitute means that they've had to issue a new one to the person because it was lost originally. Then we come down here and enter the information that the boxes ask for. The EIN is going to be on your W-2, and it stands for Employer's Identification Number. And if you look on the W-2, you'll see that it is actually box B. So the top left-hand section of the W-2, or at least in our practice W-2, is where you're going to find this. You will find that as we do multiple returns, that not all W-2s look alike, and so sometimes you have to go searching the format of the W-2 to find the numbers that you need. But fortunately, this is labeled as box B, and it corresponds to B up here on the software, so if you can find box B, enter that number. Here it's 99 and then 3333. You then want to go over here. This has already been filled in for you, and you want to make sure that this matches the address that's on the W-2 for the taxpayer, not all addresses that are the current address will match what's on the W-2, because a person will sometimes move around during the year and an employer will put the last known address on the W-2. So it could be that at the time that they worked for the employer, maybe at the first half of the prior year they lived on Main Street, and by the second half of the year they lived on 2nd Street, and so the address would be incorrect. If the address is incorrect, we need to make an adjustment there so that the address given on this page matches the address on the W-2. Otherwise, the IRS could reject this return. Then we have to come over here and enter the employer's address. And again, you should be able to enter the zip code, and it will fill in the town for you. If the town fills in incorrectly, make sure to check the zip that you've entered in case you've entered it incorrectly. Then we scroll down, and you'll see in this bottom section how all of these items are numbered. These numbers should correspond to the numbers on your W-2. No matter what format you see the W-2 in, the boxes should all be numbered in the same way. And so it's asking you to enter any numbers from the boxes that have the corresponding number designations. When you enter the number from box 1, it auto-populates boxes 3, 4, 5, and 6 for you. So here's a time-saving tip for you. Boxes 1 and 3 will not always be the same, and boxes 4 and 6 are always calculated based on what's in box 3. So what I usually do to save time is I will look at the number in box 3 and enter that in box 1, even if it doesn't actually match what's in box 1. And then when it populates all of this, I go back through and I change it to match what's in box 1. That way everything is auto-calced for me and I don't have to go through and change a whole bunch of boxes. Now, it will not auto-calc box 2 for you. That's because the amount of federal tax withheld is different for everybody, even if they have the same amount of wages. It's all contingent on the filing status of the person and the number of dependents they have, all kinds of things. So you will always have to enter this number in directly. It will never auto-calc for you. Then just go through and make sure that all of these numbers match what you see on the W-2. Sometimes on the W-2 they round, and on the software this year it looks like it's not rounding. Different softwares do it differently. Some softwares round, some don't. And all of your entries should always match exactly what's on the W-2. So if the employer has rounded, you need to round to match what's on that W-2. And then you'll look through these other boxes to see if there's anything on the W-2 that corresponds to these. The next thing I see on our W-2 in our problem is box 13, and it has retirement plan marked. So make sure to mark that on your W-2 on the software, and then keep scrolling on down. It looks like the next box that's filled in on our W-2 is line 15. This is the state information. So the W-2 reports not only what was withheld in taxes for the federal government, but also any taxes that were withheld for the state government, and this is going to be important when we work on a state return. This person worked in Missouri, and the state EIN is given on the W-2. Usually it is not the same as what is given for the federal identification number, but for simplification purposes we made it the same. Always look and make sure that the amounts, if they're auto-filled for you, match what's on the W-2, because if it doesn't, you're going to have to make an adjustment. Also, you have an option down here to add a state. In our practice returns, you're not going to run into that, but there are people who will actually work for a corporation that's based in one state, but they will perform services in another state, and the state that they perform services for will usually tax income earned in that second state. And so you could see a W-2 with more than one state listed on it, and if that's the case, then you would click Add State and fill in the state information for that second state. Also, you'll notice that we didn't fill in boxes 18, 19, and 20. You may see boxes 18, 19, and 20 filled in if a person worked in a city that imposes a city tax or a county that imposes a county tax, and you would enter those in if they were filled in on the W-2. Click Continue. Then if your person has another W-2, you would add that, but our person does not, and so we can go ahead and continue to enter her other types of income. It's not at all unusual to see a person come in or a couple come in and have 4 or 5 different W-2s. People will often change jobs during the year. We just continue to enter in each W-2 until we've accounted for all of them. Now there are 2 ways that you can approach doing a tax return. I did the W-2 right off of the bat because number one, we knew that we had one and it was at the very top of this. I like to get most forms entered and out of the way as soon as possible. I usually start with my W-2s. But now we're looking at a list of information on our practice return that Arabella has given you, and that's not going to be unlike what's going to happen when you actually sit down with a real client. They're going to give you a stack of information and you're going to have to sort through it. You can either go through the order that the software gives you and you can sort through their things and put them in that order, or you can go through and enter things in the order that you have stacked them in. And so that's what I'm going to do just so that I can check everything off as I go through it. So in Practice Return 1, we can check off that we did the wages because we entered the W-2. And then we look at the other income items that Arabella is reporting. She reports that she had a gift from her mother in the amount of $9,000. Well, you'll know from Chapter 3 and that chart that we have that tells us what's taxable and what's non-taxable, that for income tax purposes, a gift is not going to be taxable. So we can actually mark through that. We're not going to see that on our tax return. However, the next item down that we see is interest on a savings account from a Carthage bank. And it was reported on a 1099 INT, but then it looks like the taxpayer did not bring that to us. A 1099 INT is a document that a bank or other institution that's paying interest will use to report interest to you. Now, they are not actually required to issue one of these unless they have paid $600 or more in interest to you. So you may have a client who says they know that they received interest, but that they didn't get a statement, and that's entirely true. And so for that, we're going to have to go off of the amount of interest that the taxpayer reports to us, and we will just make a note on our intake sheet in that particular instance that the taxpayer reported to us that they had X amount of interest, and that's what we entered on the tax return. So in this particular case, we're going to go in and enter interest and dividends. You can see where 1099 INT shows up. And we had interest or dividend income. And it's going to do this one by one. So if you have interest income from one source and dividend income from another source, don't feel like you have to check both boxes, because in fact it won't let you. It wants you to enter this one thing at a time. So we're going to tackle the interest income first and hit continue. And if you know the name of the bank, you're going to put it in. We do. This is Carthage Bank. And then the amount of interest income that was earned, $12. Now, if you have the 1099 INT in front of you, it actually tells you what boxes you'll find all of these things in. But if you don't have an INT and you have somebody who says, well, I know my bank paid me $12 on my savings account last year, you'll just enter it into box 1. You will go ahead and ask them, however, if they had any of these other items, just to make sure that you have all of your bases covered and you have everything reported. In this case, the only thing we saw on the list was that $12 worth of interest for Arabella, so we're going to mark that off. We don't have anything else that we need to deal with here. We hit continue. Then as we continue down the list, we see that she has qualified dividends from Pretty Puppies Inc. Well, that falls under the category of interested dividends, so we're going to add. And now we go down here and we check dividend income and continue. and it's a form that looks very much like the one we just looked at, but this one is specifically for dividends. Type in the name of your payer, and if you have the 1099 DIV, which is the form that reports dividends, again you'll see how all of these lines are numbered. It tells you what box all of these numbers should come from. If the person doesn't bring it in, but they tell you they know how much you have in dividends, type in that amount that they give you as ordinary dividends. And I know you're saying, but wait, I just read this line and it said that they are qualified dividends. They're not ordinary dividends. Well, what happens is anything that is a qualified dividend gets entered into the ordinary dividends line and into the qualified dividends line itself. So you're actually going to see that $100 show up in both spaces. So essentially what happens is total dividends paid by a specific source get reported in that ordinary dividends box, and then you go on down to qualified dividends and carve out the portion of those dividends that are qualified. It's not at all uncommon to see the same amount show up in the ordinary dividends and qualified dividends box. So $100 of dividends were paid by Pretty Puppies Inc., and $100 of those dividends were qualified. This tells the system what it needs to know to do the correct calculation. Then we scroll on down, and we're going to hit continue. The next item that we see on our practice return list is gross income from the sale of 100 shares of Pretty Puppies Inc. stock. And it says that the information was reported to us on a Form 1099. So we're going to hit continue and continue again until we get back to our list of income. And we scroll down here until we find capital gains and losses, Schedule D. Because we've talked about capital gains and we've talked about the fact that when you sell stock, if they're held as an investment, which most people hold them as an investment, that they're going to generate a capital gain or loss. Schedule D is where those show up and get reported. I'm going to report it here. Now it asks you what type of items you're reporting. The sale of stock, it's always capital gain and loss items. Unless you have a document that says that something you get is an additional capital gain distribution, then you can skip these lines. The very last line here is sale of a main home worksheet. We're not going to be dealing with that in this example, and probably most of our examples will not deal with this. You're very rarely going to come across this in VITA, and if you do, then call Dr. Kasi over and she'll help you out with that. So for right now, we're going to do capital gains and loss items. Hit begin. Now our problem tells us that the sale of the stock was reported on a Form 1099. For our purposes here, we're going to assume that the person brought the 1099 to you and you're entering the information directly off of it, even though we don't actually have a simulated 1099. We're trying to make things easier for this first example. But we do have all of the information that we need to know. So under description of property, you always start with the number of shares you sold, so 100, and then the name of the stock that you sold, Pretty Puppies Inc. And it will only let you enter so much, so you'll stop where it stops. Also, if you know the ticker symbol of the stock, you can just enter the number of shares and the ticker symbol, and that's also sufficient. Then you have to enter the date acquired, and if we read a little further down in our information, we'll see a line that says, the stock sold by Arabella was purchased on 3/1 of 2006 for $4,000, and it was sold on January 15th of the tax year in question. So it was purchased March 1 of 2006. It's going to tell the system that this is long term. Sometimes you will get people in who have sold things, or they've sold stock and they don't know when they bought it. This happens all the time. Unfortunately, what happens is they don't get to deduct their basis and the entire thing is treated as capital gain. And so usually we pause the return and we send them away to try to find that information so that they don't have as much of a gain. But if you have a person who absolutely knows they will not be able to find that date, then you're going to click this box for if the date was unknown. Okay, and then we come down here. It wants to know the date sold. We said January 15th of the current year. I'm recording this video in 2016. We're doing tax returns for 2015, so I chose 15. Obviously, I hope to use this video for many years, so you'll always choose the tax year that you're doing your tax return for. You have an option to click if it was a short sale. Very rarely do we deal with that. A short sale happens if a person sold the stock before they ever owned it. We're not going to talk about that because we almost never see that. Then we come down here to the sales price, and it says that they purchased it for $4,000, but we have to go back up to the gross income line. It tells you that we sold it for $15,000. Oops. Sold for $15,000, and then we select the cost basis type, and you're going to look if you have the document in front of you and the cost was reported to the IRS. Choose 1099B box 3, cost basis reported to the IRS. If sometimes the brokerage doesn't know your cost, maybe you transferred the stock in there and didn't buy it through them, and so they don't have a basis listed, you would choose this next one down, 1099B box 3, cost basis not reported to the IRS. And if you didn't receive a 1099B at all when you sold the stock, maybe it was a private sale that you didn't do through a brokerage, you would click this. We, in our case, are assuming that we received a 1099B, and we're assuming that that cost basis was reported to the IRS, so we click that first line, and we know that our cost was $4,000. And then you will never enter anything in this next line without permission. It's an adjustment to the gain or loss. Almost never happens, especially at the level that we're doing tax, so you're going to leave that alone. Don't enter anything in there. Okay? And then, is this a collectible exchange? Again, almost never happens, will never happen to us in practice, and I have never seen it in the Vita Clinic, so leave that box alone. Choose Continue. If you had additional stock that you had to enter in, of course you would hit Add, and you would enter each of your sales. Then we look and we see that there's a state tax refund of $50. We go on down and we also see other information that says that Arabella did not itemize her deductions last year. A state tax refund is taxable to a person only if they itemize their deductions in a prior year. Since Arabella did not itemize, we don't have to worry about that $50 refund. I'm going to keep working my way down the list in this practice problem to see if there's anything else that we need to pick up. It says if Arabella has a refund, she wants it to be mailed to her address by check. So we're going to keep that in mind as we're finishing the return. We know that Arabella didn't itemize her deductions last year. We've already used that piece of information. It says all persons listed on the tax return were covered by insurance all year. The insurance was not through the marketplace. We're going to learn about Obamacare and marketplace insurance, and this software is going to ask us about that as we go through and finish up. Then we have reporting hints down here at the bottom. The line just tells you that any qualified dividends should be entered both as qualified and ordinary dividends. We've already discussed that. And we're ready to go on and continue on with the return. It looks like we've entered in all of our income and we don't have any other special deductions to worry about. So we're going to continue. Since we are finished entering in all of our income, we could go ahead and click continue a whole bunch of times and eventually let the software roll us forward into health insurance, or we can just click on health insurance and go on to this next section. So in the health insurance section, this is where it's going to ask us if the person was covered, because there's a new law as of a couple of years ago that everyone in the U.S. has to be covered by health insurance. Now there are certain exceptions for that, And as we get closer to tax time and doing real tax returns, you're going to see flowcharts and you're going to see lists of exceptions. And as we get into other practice returns, you're going to see how we enter in something called marketplace insurance. That's essentially where people are covered through Obamacare. But we have to go through and answer these questions to make sure that our taxpayer is in compliance with the law, or if they're not in compliance with the law, to give the software the opportunity to calculate the penalty that they're going to have to pay. So the first question asks, did you or your family have health insurance at any time in 2015? Yes. It says that all persons on the tax return were covered by insurance all year, and the insurance was not through the marketplace, so we can hit it yes and continue. And if you don't know whether the person was actually covered, it gives you a list of some of those things that would cover it or be considered coverage. Okay? And then here it wants to know, did you purchase the insurance through healthcare.gov or a state marketplace? Healthcare.gov is also another name for the marketplace, and we can check no. And then hit continue. Here it gives you an opportunity to list anybody else who's a member of your household, and we don't have anybody else. We've got Arabella and Ginger, and so we'll click continue. And it wants to know, was your entire household insured for all 12 months of 2015? Yes, Arabella and Ginger were. If you choose no, it's going to take you into another set of questions that you have to answer so it can determine if there are any exceptions or if there's any type of penalty that's due. Now you have the opportunity to add a state return to your tax return. So you've done the federal portion. Let's go in and see how this works. So we're going to go in and choose our state, Missouri. And we choose Missouri not because that's where we're preparing it, but that's because that's where the taxpayer lived and worked. And you're going to choose whether the person was a resident, part-year resident, or non-resident. Resident means that they lived there for more than 183 days, and this should tell you what all of these different things mean, right? Or if you have a person who was a part-year resident, so they moved into or out of Missouri during the year, they'll be a part-year resident. Or if they were non-resident, they worked in Missouri but they didn't live here. You're going to choose Arabella was a resident, and so we select the county that they lived in. Arabella lived in Jasper County, and she was a member of the Carthage R9 school district. Then we hit continue. And now it comes in and it already says that you've completed your standard Missouri state return. The great thing about Missouri is that for the most part, it just calculates based off of your federal tax return. And so you don't have to make very many adjustments unless you have other credits or other things that you need to put in there. And later on, as we get closer to tax season, we will do the training on some additional tax credits. So after you have completed your tax return, it will generate a PDF for you that looks like this. And you can go in and look at it on PDF, or you can print it out. And generally what I like to do is I like to go through and print out the tax return, and I make sure that everything that was entered as an income item is showing up somewhere on that front page of my tax return, and anything that I think should be a deduction is showing up on the back page of my tax return, or the lower half depending on what type of deduction it is. So if we look through here, we can see on line 7, $52,945, that's the amount of Arabella's wages. We went through and we said the $9,000 didn't get reported. We said that she had $12 in taxable interest. We see that that's reported there. $100 of dividends. You see it's reported here as ordinary and then over here as qualified. Again, just because it shows up twice and because you entered it twice does not mean it gets double counted. What it means is it gets calculated somewhere else, and there's a different taxation scheme because qualified dividends get treated like capital gains and taxed at a special rate. Then we come on down here, the capital gain or loss. You see that summarized as $11,000. But you also see, if you read that line, it says attached Schedule D. Schedule D, if you continue to scroll through these tax documents, you will see where you have reported your stock sale, and you'll see the amount that you reported as the sales price and the amount that you reported as your cost, and you can see how that $11,000 was calculated. And it makes sense if you think you sold it for $15,000, you paid for, you would be expecting to see $11,000 worth of gain show up there. So there's 1040 page 1. If we want to see the back page of the 1040, click page 2 up here, scroll on down. I would expect to see the amount of federal income tax withheld reported down here on line 64, $13,500. That shows up there. And that's how much I owe. If you want to see any forms other than the first and second pages of the return, you will come up to the top of this preview and choose Preview Return. It's going to generate a PDF for you that will show all of the documents that it will print when it's getting ready to file. Choose Print Your 2015 Tax Return. This will not automatically send this to your printer. Instead, what it will do is it will generate a PDF for you. Then, if you want to see the other schedules that are attached to Schedule 1 and 2, you can scroll down. Looks like this is the permission to e-file form, which we haven't learned about yet, but we will. So page 7 is actually the first page of your Form 1040, which we just looked at. Page 8 is page 2 of the Form 1040. The next form down is Schedule B. This is where dividends and interest are reported, and then they flow up to your Form 1040. And then Schedule D, if you want to take a look at what you've entered for the capital gains, this is where you're going to find it. And because it was long term, you have to scroll down near the bottom of the page. The bottom of Schedule D has all of your long-term gains and losses, and you'll see that the proceeds were $15,000 and the cost was $4,000. When you subtract one from the other, it generates that gain of $11,000. If you have any questions as you're working through this, please make notes and make sure to ask me in class. This concludes this video.